We are back with Janae Adams talking about the Fed's interest rate cut and how it impacts your wallet. She also is taking your questions. You can text them to 336-379-5775. So Janae, we're going to go back here with our viewer questions here. Someone is asking, will my Social Security monthly check payments be affected?
So that's another downside of the interest rate being cut. The great thing for those who have Social Security checks over the last few years, as interest rates are going up, so were their Social Security checks. And so now that the interest rate is going to start to get cut, those Social Security checks could see a slight cut. We don't know exactly what the cut is going to be just yet, but I'm telling those who do depend on Social Security check to start to adjust their spending plans, their budgets right now before the new year comes in.
Okay. Why does a credit card not often negatively impact your credit?
Yeah, so the reason that it doesn't usually negative impact it is because if someone borrows money and pays the credit card back or pays the people back, then your credit score is going to stay up, because that's the point of it, is to go into debt, then pay it off, and that's how your credit score stays up. So that's the same thing with anything. It doesn't have to be a credit card. It can be a car. It can be a home, anything like that. If you go into debt and pay it off on time, then your credit score goes up. That's why it doesn't negatively affect it.
Okay. Someone else is asking, how do I freeze my credit?
How do they say it again?
Freeze, F-R-E-E-Z-E.
Oh, with their freeze credit.
Mm-hmm.
And so they can actually talk to the three different credit bureaus in order to freeze their credit. They'll have to talk to each and every one of them to make sure all of them are off. So they can either go to their website, or if they feel better, they can just call those different credit bureaus to put a freeze in place.
Okay. Another question, we're getting a few in, by the way, as we're speaking here. How does the interest rate affect variable interest rates for a home equity line?
Yeah, so it's going to be the same thing as if it was a mortgage rate. So it will bring it down according to the interest rate cut. So that was the frightening part about variable interest rate with home equity loans, is that it moves with the Fed and their interest rate. So as it was going up, that variable payment was going up each and every month. And now you're going to start to see a slight cut in it. But just remember, it's only 50 basis points as of right now. And you may see another 50 basis point before the end of the year. But if I were you, I would definitely be looking to pay aggressively to that principal of that home equity loan.
Okay. What are the expected short-term and long-term impacts of the interest rate cut on the economy?
Yeah, so definitely with the short term, it puts a little bit of positivity into people's minds, because a lot of people were really bummed out about the economy. Even though it was not in a recession, technically, people still felt that certain way. So right now it's giving people kind of a boost of happiness that they are seeing a rate cut. Now, what you will see more than likely is that you're going to see the inflation rate continue to go down. That's the only reason they cut the interest rate, because they're seeing it go down to their 2% goal. Now, the negative impact could be that soft job market continues to go softer, because they might have waited a little too long for this cut, but we won't know that for a few months. So that's the negative impact. But that interest rate cut could get us back to creating jobs in 2025.
Okay. Another viewer question, how will the new rates affect CD rates? Will they also be reduced?
So if you're already in a CD right now, that rate is not going to change. Now, future CD rates, they go along with the Fed. They go along with the interest rate. So why you've seen such good rates over the last couple of years is because they have been raising the interest rates. But now that they're starting to cut it, these CDs could end up taking the same path down. We just don't know how far down that they'll go along with the Feds.
Okay. How will this change affect small businesses?
So this change could affect small businesses in one major way. Those small businesses who need to borrow money, they're going to be able to borrow money in a cheaper way because the interest rates are going down. So that means that whatever rate was on that loan 6 months ago is going to be lower going forward, because the Federal Reserve has lowered those rates. Another thing is that with the inflation rates going down, the cost of goods that they have, the products, services and so forth, they won't pay as much, which means that they're going to have a larger profit margin in their sales because they won't be paying as much as they were the last couple of years because of the interest rates.